Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, January 15th, 2020. In this video, I want to start out with an update on the market and then maybe just touch on a few of the recently highlighted trade ideas and kind of share my thoughts. They're all somewhat related here. Starting out with the market, I'm going to color code that line yellow. I put out some charts earlier today on the market leading FANG stocks plus Intel and the major indexes, some levels to watch. And so here you have a trend line right there. That is that secondary lower the two trend lines on SPY 60-minute chart, and you can see supports. It looks to me like we're going to get a breakdown soon, but we got to see those lines go. We need to see all these uptrend lines go, and in some cases you have some horizontal support levels just below. And for now, let's just say if we do get a breakdown in the next few days, looking for at least tradable pullback. Tradable means it might be worth your while if you're an active trader. Maybe talking a 2-3% drop in the SPY. I could see that gap being backfilled right there, or at least a move down there. So we're talking 2.5-3% from current levels. QQQ. I put up some charts this morning with the Qs on a 15-minute chart, along with the market-leading FANG stocks, Facebook, Amazon, Apple, all those big ones, plus Intel as well. So keep an eye on those. We're starting to crack. Let me zero down here. The 15 minutes a little bit sharper here. There's again the yellow lines right there. So you can see we crossed this trend line, but you have this horizontal support at 219.81, and when you have two support levels in close proximity, especially during a strong trend, give it the benefit of the doubt, wait for the last of the two to go. So that should do the trick. And my guess is it's coming soon, but again, this market's been very resilient, shrugged off a lot of divergences, overbought readings, but that won't last forever. And again, I like to get these out in advance. Been talking about potential pullbacks and levels that needed to get taken out, and then where the targets would be. Sooner or later you'll get that, and by getting this out to you in advance, you can replicate these charts and have a trading plan and be ready to move if that's what you're looking to do. You may not have any desire to short this market or to buy a dip, but so these levels, just as an active trader could use, let's say on a break of 219.80 to short QQQ, I think at least coming back at minimum to this 216 level right there. So that would be a drop of from where we're at right now. Well, let's just say from the 219.81 level, that would be a drop of about 1.7%. Very lucrative if you trade NQ or any of those contracts like that, because you're using a leverage factor and they're pretty good. About 2.5% drop down to that 214 target, and I think that's very doable. So those are levels to watch. And futures, same things. I give you the the yellow uptrend lines this morning. There's NQ flirting right on that level. It could certainly, as those scenarios on the FANG stocks had, I could easily see, a little more upside, and doing so would simply extend the existing negative divergences, as long as it's what I call a marginal new high, slightly higher high, doesn't last very long, then reverse. Otherwise, we push up and then you burn through these previous highs on the indicators and you take out your divergence. You have negative divergence, indicators making lower lows and prices making higher highs. And so all you need now is, of course, a sell signal. And that probably, since that one's just below, we should color that one yellow as well, that 22-ish level, since it's just below the trend line there on NQ. It'd be nice to see that one taken out, and taken out impulsively as well. So there's NQ. I think you can make it out here. I probably should have zoomed that chart in a little for you. There it is. And ES. There we go. Same thing there. We have a horizontal minor support there, about 32.76 and change, with an uptrend line, a little minor uptrend line, and that could take us down here. That'd be about a 2.5, maybe 3% pullback in ES as well. And what you might want to do if you decide to replicate these charts, with the market being strong and these market leading stocks doing a lot of the heavy lifting and keeping the market up, you want to put the odds in your favor. Replicate these charts. I use log scaling even on the 60-minute charts here. And the most important levels again are in yellow. You have the bottom of the price channel very well defined. Lots of reactions on that trend line off the early December lows in Apple. So break of that, and then you have a decent horizontal support there, about 307, and break of that should most likely trigger correction. And Apple will probably do the trick. If Apple breaks down, I imagine the rest will follow. But you put the odds in your favor. The more trend lines here and support levels you can replicate, and set price alerts. Click on a trend line, whatever charting program you're using, and set an alert on it if it breaks. And what'll happen if you set alerts on all these trend lines and nearby support levels, it'll probably be like popcorn going off. You'll have all alerts probably on the same day, and even within the first within an hour or so, most of those breaking support. That's how it works, because these guys are indexed and they're all together. Now here's one in the case of Alphabet. I have the trend line is quite a bit above, so you'd see I think it was Microsoft we were just on, and maybe even Apple probably break down first. And so just keep an eye on all these guys. Buyers may step in there. And what I like to do is, you're watching. Let's just say we do get a sell signal, and Alphabet comes down here, and let's just say it hits that trend line, and it's going down fast. So if that was the case, you'd probably get a momentum fueled overshoot down through it, hit that 1365-ish support right there, and then bounce. So at the same time I see Alphabet, let's say we get a impulsive selling in the next week or so here. At the same time, I see Alphabet coming up on that. If I go through the rest of the stocks here, Amazon, Apple, Microsoft, and they're all coming up to comparable support levels on their own, then that's a level where I might cover shorts and reverse for a quick bounce. But again, like I said, there's a lot of moving parts, and I like to try to keep an eye on as many of these charts as possible. So again, you can visit the the screenshots of those charts. Intel already broke down below its 60-minute trend line. That one comes all the way back from August here, but it's not going very far. Why? Because it's a top-weighted component. This is the sixth largest component, and that's why I sometimes refer to my FANG groups as the FANG-E. FAAM plus I. FAAMG, I should say, plus I for the Intel, sixth largest. And again, because it's indexed, it's holding up. It broke down technically, breakdown backtest, but number one, you don't see any impulsive selling. Two, it hit the support level here. And three, the rest of the NASDAQ 100 is going up. So what happens? Money flows. People are buying QQQ. QQQ buys what it owns, and it buys it prorated. More money goes into Intel than goes into Cisco, for example, which is further down the line as far as weightings go. So there's some targets, and I'll tell you, if things get ugly, there's a big old gap back here in a thin zone to be filled. So there's a potential based on this chart pattern too. When I look at the pattern, it's a bearish rising wedge pattern. You take the widest part of the pattern, and then you add that to where the pattern breaks down to give you an estimated price target or measured target. That comes darn close to that 53 target. So how you trade it, if you even trade it, it's up to you. I know there are those bullish and buy the dip mode, and that's why I'm giving you these support levels. You decide which one to buy. I think if we get some pretty convincing sell signals on the market, impulsive breaks of support, see some of the key stocks break those support levels I mentioned, or all of them, then I think that's a very doable target for Intel, and that's going to be, if I can measure, I need to grab right around that level without grabbing the line. Let's just go above. Oh no, I changed tools. There we go. That would be a drop of about 9%. And that would obviously take the semiconductor sector down with it. So there's another trade idea. I wasn't planning to cover it. Let me just look at my chart of stocks. I haven't updated this one in a while. This is a 60-minute chart. Here's a trend line that hasn't been visited in a while, and my guess it will be visited soon. Here, I'll do this. Let's turn all that off and draw that trend line from here, and show you what I'm talking about here. There we go. Uptrend line right there, somewhere along those lines. And when you have an uptrend line, you have these rallies, and you come and visit that trend line every so often. So even for the bullish case, as you can see, nothing goes up forever without corrections along the way. We're due for at least a test of that trend line, and that's quite a bit below us here on stocks. It'd be about a drop of roughly, depends of course when you get there, about 8 or 8.5%, and that aligns with that 9% drop that I just showed you on Intel. So here's what it looks like on the daily chart. That's a very key trend line right there. It comes off the early December lows. And based on these divergences over bought ratings, I would say there's a good chance of it getting hit. And this, like everything else, is a crowded trade, one-sided trade. And so if you get that rush for the exits, it could be a quick move down. And so there's another one to keep on your radar there. I don't know why here it's coming in the way I have that trend line drawn at about a little less than 8%, maybe a 7% or so drop. Again, depends if and when we get a sell signal, because if we continue to grind higher for a while, yeah, and then it's going to change things. Maybe we break down from up there at higher levels. And then of course if you don't short or have a margin account or prefer ETFs, you can use SOXX, 3-time leveraged. That's an old chart there. It hasn't been updated, but you can see it's setting up. Let's just update this in this nice little falling wedge pattern, nice clean downtrend line. I'd have to revise these targets. That would have been from a previous trade or trade setup. Don't know if we added that one, but that would be, I'd have to revisit the chart to give you targets, and I'd also have to align those targets with this one, which is the same index that SOXS tracks. All right, other trade ideas. Bitcoin and the Bitcoin proxies. I've updated this quite a bit recently. Not much to say right now. It still looks good, and it'll probably get another leg up if and when the market corrects. Because remember, you tend to get a flight to safety bid. And this is where people, a lot like moving money into gold. There's a certain subset of people that believe in Bitcoin, and they'll buy Bitcoin, and most likely if the market takes a pretty nasty leg down. So charts are still constructive, and again, where Bitcoin goes, Riot and Overstock are likely to follow, so we'll just not bother with an update on those today. Cannabis stocks, I updated that today. Again, you can see all those charts on the front page, and there were comments that I made yesterday. Let me pause this and find those. As always, I encourage you to come in, if you're of course, if you're interested. Maybe you don't, care to trade the cannabis stocks for whatever reason, but I'll often add additional thoughts. And this is another reason I like to do videos. I can kind of convey all additional thoughts, all the nuances with a trade, things to consider. So this was one of my replies yesterday to somebody who asked which my favorite was, and I said, look, I like them all. That's why I posted those. Those were my favorites in the sector, and I went on to say, look, these are. What I like to do is to take a shotgun approach and spread my bets among a half a dozen or so of the best looking setups, and that's exactly what I gave you there. I think that was a half dozen setups in the sector, and I went on to say, these would probably be my top picks, but I went on to also say you never know which are going to turn out to be the real screamers, and that's why I like that shotgun approach. And I've said this often, that you give me a bullish or bearish sector, and in just about all instances I can outperform that sector by sniffing out the most bullish stocks within it or the most bearish stocks if I'm shorting. And so far that's been the case today. You can see the names that I provided yesterday, the individual, those top picks are outperformed collectively. They're outperforming MJ by a good margin. And then somebody asked, hey, how long do you think it's going to last? Well, my answer was this, and that's why I want to do this video. By nearly all accounts, we appear to be in the early stages of a new rally in the pot stock. Everything, the check marks across the board, I couldn't have possibly any other additional check marks. The price action today has been very, very bullish with all those stocks that most of them had already broken out. Here, let's just take a look at some of the charts. What do we have here? Let's grab this over here. I'm going to go to try to cover these. Well, let's start with MJ, of course. That's the sector ETF. Okay, so the level to watch in MJ was 1750. It was that basing pattern right here. You can see we're trading sideways under that level, bounce, bounce, bounce. And so a couple things have happened. The sector recently broke out right here. It wasn't a very convincing breakout, and then it fell back and it back tested the trend line. So I'm talking about a breakout below the primary downtrend line there, or well, I really should call that the secondary downtrend line. This I'll refer to as the primary downtrend line. And so we broke out, back tested, but then an impulsive reversal on the back test. That's good to see. Ran up, checked that 1750 level once more, and then shortly after I post update, look at this. This is what I talk about impulsive. See these volume bars right here? Boom, this was the breakout above 1750. It came yesterday, and we printed a solid close back above there, about 1778. And then boom, follow through today, first target hit, You can see where the first target's at 1878. We're at 1884. You overshot it a little, and right now it's you're having a reaction there. So we could get a pullback, and the way to trade these, you've got to give it. These guys move, and this is just ETF. Let's go through the individual stocks real quick. Talk about that because this is where the money's to be made right now. We had Tilray. Tilray went on right after the post yesterday. It went on to trigger an objective long entry. It took out that trend line that was posted just below the trend line here, and took it out. And in the single day, hit that first target for whatever it was. I don't know, 20%, something like that. 24%, 25%, whatever it was. 20. We'll call it 22%. And so far, there's a reaction in the sense that it did pull back from there. As I say, that's why I list multiple targets. Each target is a level where a reaction is likely, and that's a pause or consolidation, or a consolidation or a pullback. So we pulled back a little and then powered on up through it. We're essentially trading right about on it, and that's the thing right now. So we're looking at two so far. MJ, the sector ETF itself, right on resistance now. But again, so whether or not we pull back or just keep going, it's hard to say. But as of now, the charts are real constructive. And I also think this very bullish price action, again, it doesn't get much better than that, would indicate there's more upside to come in these guys. Now, the one concern I have is, what is the market going to do? If the market were to suddenly start taking a sharp leg down, you might see these lower quality trades such as these cannabis stocks. You might see the risk on and the momentum traders exit those. But for now, we don't know. Maybe the broad market goes up for another week, month, 3 months. Maybe the market corrects and these guys continue to go up because they're not S&P 500 components or Nasdaq 100 components. I don't believe any of these are. No, they shouldn't be. So therefore, they don't have to be dragged down with broad-based selling like a lot of other companies. Let's just go over a few others. We'll go over them all now. ACB. Again, these are also the big leaders in the sector. Right up at that trend line right now. It's rallied about, I don't know, whatever it was, 20-something% since where it was posted yesterday, but at resistance. So there's a common theme is right now, if you didn't take any of these yesterday and you're kicking yourself because they're up so much, I wouldn't take full positions. I wouldn't, if you're going to allocate whatever your number is. You never put all your money in any one sector or any one stock. But let's just say you have, whatever your number is. You have a $100,000 portfolio and you want to commit 20, 30,000 of these, the cannabis sector. You wouldn't put it all in today, or at this moment, I should say, because so far we've looked at quite a few that are at resistance. This one really doesn't have any resistance here, and it just broke out of an inverse head and shoulders bottoming pattern that was shown on the chart yesterday. And if you're not familiar with those, you can do a Google search and you'll see how they work. You get a left shoulder here, a head, a right shoulder, and then the neckline is there at that resistance at 2240, and it broke out. That's your measured target. This is my final target, a little bit above the measured target, and this is my next target here, 2908. What other ones do I want to cover? Chronos, CRON. Breakout, impulsive, everything you want to see. Next target's up there. So again, some of the stocks are at resistance. If they do pull back, I wouldn't bank on it. I'd rather sit tight for now. That's just my preference. And if they do, you can look for a pullback to support, to add to or initiate a position. Otherwise, this one could keep on going. And I've traded these guys when the momentum players get in, and if this market still has this risk on appetite, these guys can just keep going and going and going. That's the one thing I will say. Don't underestimate how far and how fast and how overbought these stocks could be. Again, I've traded them for years, and I've seen these runs, just like this one in Quran right here. Here's 153% without even blinking. Didn't even look back. Right there, we had a rip that was about 127% before it even took a breather. So again, it's the nature of the beast. I always say, know what you're trading, know the type of stocks. And the other thing to that, if you want to make the big bucks, you're going to have to give these guys some room on the pullbacks, because along that way you had about a 30% pullback there, maybe another 25-30%. So you want to capture the big trends. Even these smaller trends, sometimes you'll get a little pullback along the way. So what I'm getting at, if you're running a 2-3% trailing stop, good luck. I mean, you might continue to go without getting that hit, but usually there's going to be some pullbacks. And any stock that can go up 10, 20, even 30% in a day like these guys can certainly pull back, that much as well. And let's just cover a couple others. TGO, DF. Breakout above the downtrend line. Broke out yesterday actually after the post. Followed through today. Next target's up there. GWPH. This one's not going to usually run as much as the others. It's a a pharmaceutical drug manufacturer, and breakout back test of that 110 and downtrend line today. And then OGI. And here's the point about you never know which ones are going to go. Here's one. By taking a basket of those stocks yesterday, you were in this one today and it gapped up. I'm trying to tell you exactly where it gapped up. I don't know where the open was, but 277. So right around there. That's about a 29% gap on the open. But from where it closed yesterday, the stock's been as high as 50% today off yesterday's lows, and it's still up 45% right now. So there's the the point I try to make. Take a shotgun approach. And so 2 points. Number one, you never know which one's going to be the rip today, tomorrow, or turn out to be the biggest winner in the group. And the other thing is, collectively, if you take an average of how much each of these stocks are up, those the 6 or so that I mentioned, I assure you it's going to be up more than MJ, today and going forward. I imagine they'll continue to outperform. Crude oil has broken below the trend line. Not what I like to see, but we do have some divergences there. And in this market, it's a tricky market. The market makers, the algos, they know where the stops are placed. So this could be a stop rate. We could come back up. Don't know. Would I take it here? No. If I didn't own it already, I would not take it. But, however, is it stopped out yet? No. The trade is still active. At least it was last time I looked. Let me look. The official proxy is UWT. And remember, I set the stops a little bit below the actual support level just to help try to minimize or avoid stop raids. And they've come close. Here's today's low is 1164. We have a stop of 1161. So far, we're still in it. I'm not going to say so far so good. I do not like this price action. And again, I'll leave it on the site. It's an active trade unless stopped out or the final target is hit. And I've learned when you go into trade and you have a trading plan, stick with it unless something very compelling happens. Right now, this isn't compelling enough for me to pull the trade early, so we'll just see what happens there. If they take it, so be it. We can always get back in if the charts firm up later on. What's up with our UGAS? I mean, look there. That one's not looking so hot today either. Pull back, and we're still above the stop. So the same story. At this point, when you get, actually we've undercut the low. It's not uncommon once you get back down there that you undercut the low. So doing so has only given us extended the divergences that were in place at that previous low, and will continue to do so. And I'll tell you, I don't know. They may take this one. They may just barely clip the stop and reverse. It's up to you how much room you want to give it. Here's another one. Would I take it now? I might. I already have it. I already have natural gas via the futures, but I'm not crazy about it now. I don't like to see such a reversal after a breakout. I like to see impulsive buying. So there's another one. You might want to wait and see if it holds, puts in another divergent low, and then starts moving impulsively higher. Again, I'm talking to people that might not have taken it or were looking to add to a position. Where is nat gas futures? Right here. And this, I did post a chart. Somebody asked about on the front page today, and I posted this chart. I said, look, what I don't like is we took out that price channel. Remember, there's a price channel. We had been walking our way up within natural gas. It was walking up this line right here. And this one, this is the price channel. Zigzag, zigzag, zigzag. And so today we took out, and it was a pretty impulsive move, probably a lot of stops hit below that trend line, but we have this secondary trend line which may come into play. We're kind of trading on it now. You want to see a reversal. Usually when you get this close to a previous reaction low, you take it out. I showed you it had taken out in UGAS, but UGAS does a pretty lousy, not a lousy job, but not it's trying to track nat gas. But this is the real thing right here. These are the nat gas futures, so we'll put a higher weighting on these. And look, there's probably a decent chance that it undercuts that low and to wash out the stops and then may reverse. Whether you want to give it that much room or not, that's up to you. Right now, again, not what you want to see, not a position I would take right now. If I didn't already own it, I'd wait to see that kind of reversal, but I'm sitting tight with it for the time being. And finally, I had some questions about gold I saw on the site today, and we put in a divergent low with the PPO. You can see positive divergence on the PPO. My guess is from my read on this chart is we get one more leg down, come and check that 1529-ish support level, and then the next leg up starts. It could start with this divergent low. We don't have the divergence on the RSI. You don't have to. Let me change that. Let me just set this to an RSI 14 and see what it looks like. Sometimes I like to toggle between the two here on these 60-minute charts. All right, that is did not take. Yeah, we still don't have the divergence. They're very similar, just the setting on the RSI. So that's it. Like I said, you can probably tell from my voice, I don't have the highest degree of confidence. My long term, I haven't wavered on that in years. Long term bullish, and still believe gold's in a bull market. If you're an investor, long-term trend trader, yeah, I'd be scaling in on this pullback. The recent price action over the last couple of months was quite bullish. I'm just trying to talk near term and show you some levels to watch. So I think that'd be objective if we get down there, depending on how the charts look. And again, then maybe this is it. So you want to be scaling in for the next leg up. Let's look at silver. Silver to move today as well, and also put in a divergent low recently in the PPO right there, you can see, and has pretty decent support just below its 1761-ish. So if the metals do take another jog down, and that might align with that one last thrust up in the equity markets and those market leading FANG stocks that I showed you, to put in that additional divergent high, and that could happen, probably would happen if it does within the next week or so here. And so that might be a place to step in and buy. We also have a trend line that may come into play here as well, right there. Well, we hit that trend line, so it held support. Ideally, you want to see it hold. So I don't know, guys. I'm almost 50-50 on whether the correction or the pullback is over in the metals and we get another thrust up here. I like to look at the dollar too, and you can see that this is the dollar index futures, and we have this bullish falling wedge here, but the bigger picture was we had a divergent high and a breakdown there. So there's kind of cross currents, and to me, I need to see, I'm leaning this way, that I'm still longer term bearish on the dollar, intermediate and longer term bearish. Near term, it's in a trading range, you can see here. It needs to break that 96.34 level with conviction, and then that'll probably open the door to the next downtrend. But there is a downtrend line, like I said, right there, a little wedge type pattern, which could spark a near-term rally, but I'm not overly concerned, nor are my convictions very strong, because we're in a trading range right now. And so breakout above the trend line could come and run into that 97, 92-ish resistance, and then that could stop the rally. So we'll keep an eye on this. And like I said, if I have a pretty strong opinion on something, I'll try to share it. And if I don't, then I'll tell you. And that way, usually what I do is I'll just not actively engage the sector. Certainly wouldn't have a high, very large position in gold or silver right now as an active trader, because of my uncertainty of the near-term direction. And finally, another sector that I've highlighted recently, still this one continued to build on the gains. We hit that target yesterday, that 10-cent target on LTUM. Lithium Corp, and since the breakout just a couple days ago, we're up 130%, or we're today at the highs. And so, like I said, pretty constructive price action in a lot of these stocks, and I've seen it pretty much across the board. A lot of things are getting bid up. This was one I might have covered in the video. I can't recall. I'm clicking on my lithium watch list on another page and just looking at some of these that are moving today. But let's wrap it up here, and yeah, if I come across anything else that stands out, I'll let you know. As of now, pot stocks look good. Lithium sector looks good. I still like Bitcoin on those. The natural gas and crude oil, they need to reverse here soon, and show us something. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.